Hey guys, Joseph James here once again with your nightly newsletter brought to you by theschooloftrade.com. Today was November 2nd, 2009. Of course, starting off a brand new month in November. Had a fantastic month of October. Hope you guys had a great Halloween. Now guys, before we talk about the trades we took today, we had a great day in the live trade room. I want to remind you guys about that free resource online. Head to our YouTube page, guys. Lots of great information there, /School of Trade. And while you're there, subscribe to our channel so you get all the new videos that are posted almost twice a day now. And of course, please rate and comment on this video. Now, let's see here. We wrapped up the month of October just shy of 10 grand. $4.95 today. We went, I believe, 4 for 5 today in the market. Traded everything from the pound to the crude to the Rusell. Keep you guys posted as we make our way through this very long month of November. Now, the term of the day today is scalping. Scalping, what does it mean? How do we use it? In the live trade room, we are considered to be scalpers. We're taking lots of small buys and sells and immediately trying to buy or sell it back to the market. And we do that repeatedly throughout the entire day. We get in and out of the market quickly multiple times during the trading day. There are good things and there are bad things you want to be aware of when it comes to scalping. Some of the good things here, it requires intense focus. Now, this may sound like a bad thing, but in my opinion, staying engaged in the market and focused in the market is always a very important part of our routine. There's also less overall market exposure. A scalper, of course, using much tighter stops, looking for smaller moves throughout the day instead of that one gigantic home run move. Well, it means every single trade will have less exposure. And of course, it can be easier to obtain 10 one-point moves on a market like, say, the S&P or the Rusell. Tends to chop around a little bit right now. It's easier to obtain 10 one-point increments than it is to obtain one 10-point trade in markets that we're trading right now. So it can be easier, of course, in certain environments. Because we're not looking for any big runners as a scalper, we can, of course, be very agile and look to trade whatever's moving at that time. Now guys, there are 3 basic types of scalpers. There are systematic scalpers that use basically these automated systems. The computer does the trading for you. There are discretionary scalpers like us in the live trade room where we actually qualify with rules, we follow simple patterns, and we make the decision in real time. Then you've got this kind of black sheep of the group, I would say, called spread scalping, where basically you're scalping the spread or the difference in price between the bid and the ask. Now, in my opinion, some of the best markets to scalp are the S&P, but of course that's when it's moving, which is not really happening right now. Now, the Rusell, though, that has been very good to us as far as scalping. Crude oil, gold, the euro, all great markets. Here's what you need to be a scalper. First of all, grab a copy of the advanced course. Now, you're going to want to make sure you have the tools, right? The setups, the rules, the indicators, the charts, the data, right? All that stuff that comes with the advanced course to make sure you have all the tools you need. You'll also need a well-funded account. Scalping is not for the small accounts, guys. Even though you've got small risk on each trade, you're still going to be magnifying that risk over time, right, by taking a lot more trades than you would normally. So it's not for the small accounts. You also want to make sure you've got a very high-quality execution software, something very quick and precise. I would definitely stay away from TradeStation as scalpers. I would definitely stay away from an IB data feed. IB, of course, requires you to connect twice, once to their feed, then to your charts. So things that have more than one connection or have different moving parts, like a TradeStation, which is a dinosaur for scalpers. No wireless connection. Get rid of that router, right? Routers will slow you down. So make sure you're directly connected to your modem and make sure it's a direct connect, a landline connection. You also want to make sure whatever broker you choose has the lowest round term commissions, because obviously taking more trades means more transaction fees. Want to make sure you're focused on a highly liquid market. So be careful around crude and the Rusell when it gets thin. The DAX can be a nightmare to scalp, so be careful when it gets very thin like that. Beware of the slippage in a illiquid market. So stay focused on highly liquid markets for your scalping. You want to make sure you have confidence in those entries. Since you're taking more trades every day, it was magnified if you're taking stops. So have confidence in your entries. It's easy to lose money, guys, as a scalper. Now, of course, for more information on how you can implement a scalping system into your current methodology, or possibly learn and adapt to ours, come out and join us tomorrow morning in our live trade room, 7:45 a.m. Eastern Time. We open up. Now, tomorrow's a Tuesday, so make sure you guys remember tomorrow's 11:30 a.m. Eastern Time for the free webinar. Tomorrow's topic is one contract trading. Let's talk about some of those trades we actually took today. Now, we opened up the morning, and what do we see? The 1st of November, of course, daylight savings time came to an end here in the U.S. We, of course, got some volume as planned, but we had to wait a little bit longer than normal. We also had FOMC day coming up on Wednesday, so we were expecting to see a little bit of caution playing, right, because of that FOMC announcement. And then, of course, you got Halloween over the weekend. So a lot of reasons why we were expecting to see this thing be a little bit sluggish at the open. We were fortunate to grab one trade before the U.S. Open here on Crude, 916. This was a breaker short. kind of slow price action, but we saw some big aggressive sellers come in. Momentum was pointed down, and of course we had just broken below that 77.5 level, and we were kind of stair-stepping our way down here. So it made sense to put the money on the table to take the risk in this trade. Didn't get very much out of it, just the first 8 ticks out of the market there. 15 was the fill. Took our plus 4 there and scratched out when it came right back up against our entry there. You can see there, broke below that blue line, of course. That is our swing low, and we take the breaker short. Let's keep moving, though, guys. Next up on the crude, we had to wait a little bit. 10 o'clock was a big news number this morning. What was it? Pending home sales, ISM manufacturing, industrial production, lots of stuff going on at 10 o'clock. So 10 o'clock was kind of a good springboard for us, give us a lot more volume. Back in the crude again here at 10:29. Now, guys, remember, we put almost $500 in our pockets today. Almost all of it was made here on crude. So you can see how, after we took this trade here at 10:30, we began to identify a pattern in this market. We were seeing nothing but small winners, small little plus 4 scratch winners, which basically told us to be careful. Now, when you're seeing the market really not give us any follow through, no extension. Now, if we have extension, we're going to see plus 4, plus 8, plus 15, right? Nice big runners. Without it, though, we now know we fall susceptible to one stop wiping us out. So we got to be careful, use patience, and wait for those perfect setups. And that's pretty much what we tried to do all morning this morning. Just before 10:30, 29 minutes past the hour, here was a 2-step short here at 78.17. Now you'll notice, guys, this horizontal blue line here, what we did was we watched this price was trying to break through that high of the day there at 78.25. It failed at the high. Of course, we will gladly sell the high rather than buy the high, and that's exactly what we did here. We shorted the high of the day below that 18 level, got infilled at 17. We took 4 ticks out of the market for our first target, took 2 off at that point, and that locks in 8 more ticks. 10:19 here in the Rusell. Now, at this point, guys, we were starting to see after 10 o'clock, right, that news event had kind of sparked some volume here. So we took back-to-back winners here in the Rusell, 10:19 and 10:32. The first trade here, guys, as we broke above that 66.4, then, of course, made that swing high at 66.6. A break above that. What do we see, though? Momentum curled against me. Red paste of a tape, right? The MACD on my trade management chart. So we saw 1, 2, 3 signs to get out of that trade. Now what I did in this one was I simply moved my stop down to my point of entry, or should I say up to my point of entry, to lock out all the risk when I saw it start to go against my position. Now that, of course, let me be available to if the market was going to jump to the upside. It didn't, and it took me out of my entry. But of course, how we managed that trade was the key to this success. The bottom line is we didn't want this one to turn into a loser, right? Didn't want to lose any money on this one. So we, of course, looked at our indicators, followed our rules, and pulled the plug early to make sure there was a scratch trade. At 10:32, this was a better example of a better trade here. Breaker long, we broke above the 68.1, 68.2. You can see that swing high there at 68.3. Broke above the swing high, momentum confirmed, and we've got our breaker long at 68.6. Again, another 8-tick winner there on the Rusell. Now we kept going here, guys. Back in the pound, we took trades across the board today. Over here in the pound, 11.02 on the British pound, another 2-step long here. 63.82 is the fill. Now you can see, guys, this is a 2-step. So this is a counter trend trade here. We watched this price try to break below that 63.78 level. It bounced back up, gave us that swing high there at 80 even. We then waited for a violation of that swing high. Counter trend trade, of course, going against a short-term trend, locking up above 80 and getting that 2-step long. 82 was the fill. We took our 4 and then had to make a manual exit because we saw red paste of a tape, momentum curl against us, MACD curled on the trade management chart. All 3 things lined up. We got out of the trade early, and as you can see, a little bit premature, ended up bouncing again, but bottom line is took 28 ticks out of this market, followed our rules, put another $175 in our pocket, guys, and we weren't done yet. We finished up the morning 12:08, just afternoon time, on another breaker short here on crude. So at this point, we were going over a lot of information, talking about some of the trades we were taking. Of course, we watched this pattern develop right there in front of us at 12:08 on a breaker short, 78.32. Again, took another 8 ticks out of the market here. We watched price break below that 78.48 level, made that swing low there at 78.36. We take the short below the 36. That's our breaker short with the short-term trend. And again, once again, got our 8 ticks there. We saw the pattern back and forth today, guys, going 8 ticks at a time. And as you guys can imagine, we'll show you a lot more of this tomorrow morning. Total all up, guys, almost $500 today in the market. Only a 4 contract account needed. The live room opens up tomorrow morning, 7:45 a.m. Eastern Time, guys. The beginner's course is highly recommended. Come out, we'll give you a free 3-week trial. And once again, guys, my name is Joseph James. Please send all questions for lifetime membership to sales@schooloftrade.com. And we'll see you guys in the room tomorrow, 7:45 a.m. Eastern Time. We'll see you then.